very much. We're very glad to be here. Thanks for attending this morning. My name is Randall Hardy. I'm the CEO of Timberline Resources, and we're primarily a gold company. I realize this is a silver conference, but I think anyone interested in silver probably will also be interested in the gold story that we have to tell. If you like silver, you'll probably like a near-term gold producer. And that's exactly what our story is with a mine that we've got. We have an interest, a 50% interest we carry to production, and so that's what we'd like to talk about today. We have a fairly unique business model, three-pronged approach with gold production, exploration, and drilling services. As you can see there, we're a diversified gold company comprised of the three complementary business units, a mine and development with upcoming gold production, exploration, and drilling services. So this model provides investors exposure to gold production, the blue sky potential of exploration, and then the picks and shovels aspect of the mining industry as well. So what does that really mean? I'd like to kind of build for you what our business model looks like, the Timberline business model. Essentially, it starts out as a holding company sort of model, a Berkshire Hathaway kind of model, if you will, where we have cash flow from our joint venture at the Butte Highlands mine, along with cash flow from our drilling subsidiaries that comes back to Timberline Resources. We then use that cash flow to invest in exploration. Exploration, of course, yields exploration properties, and then some of those exploration properties will also add some cash flow back to the company by way of joint ventures or option agreements. The goal of the exploration properties is to look for properties that can become development projects, and then a number of those development projects, of course, move into production projects. As those projects come into production, they obviously can provide cash flow also back to the parent company. Those projects that we take to production will only be projects that really meet a fairly specific set of requirements for us that meet our expertise in the company, that we feel like we can move forward. Right now we have our joint venture partner at Butte Highlands is a company called Small Mine Development, SMD. Many of you may be familiar with them. They're one of the premier underground mine contractors and mine development operators in the country. And so with our affiliation with them, there are a number of projects that could certainly be right in our wheelhouse that could move into production projects and we'll talk a little bit more about those requirements. As those projects become producing mines and we have that cash flow, obviously it produces more cash flow for us. We can increase the amount of money that we are investing in exploration, and we can also have a program of dividends that we plan to have back to the shareholders. We feel like that in this time, dividends are going to be an important thing for investors, and we want to provide that back to our shareholders. So that's our model. Let's get right to this the first project that we have is our primary project right now. It's the Butte Highlands Gold Project. This is a project that is 15 miles south of Butte, Montana. We have, as I said, a 50% carried to production interest, which means that we don't have to spend any money on this project until it gets into production, when we'll start having cash flow from it. Our joint venture partner is funding all of that development and doing all of that development, and they will also be doing the underground mining. We have recently received our exploration permit that allows us to do the underground development, to do underground drilling, and also to do all the site preparations. Our exploration plans for this next year include driving a 6,700-foot underground ramp to get down to the mineralization, about 60,000 feet of underground RC and core drilling to just delineate better the ore body, and then they do a 10,000-ton bulk sample as well. This is a property that has a non-43-101 compliant resource. It was done by a previous company. We're updating that resource with our drilling right now, but we're still using their estimate that we had, which was an estimate of around 500,000 ounces. Looking a little bit closer at that resource, this is again, Orvana Minerals was the company that generated this resource. Had about 195,000 ounces of gold in their measured and indicated, and a little over 335,000 in inferred. The 532,000 ounces we think is going to increase when we come out with our resource estimate, which should be here within a couple of weeks. You can see there were a couple of very good drill intercepts there, and with some high-grade gold. We'll talk about our average here. So this is kind of our forecast here. First of all, the capital time, the cost to develop will be about 2 years. We're already into that process. We estimate the cost of that will be about 15 to 18 million. Again, that's fully funded by our joint venture partner. Again, about 500,000 ounces of gold. We estimate that at 750 tons per day, which is what Small Mine Development estimates conservatively that they'll be able to mine there. That leads to about a 7-year mine life, an average gold of about 0.27 ounces of gold per ton. If a lot of you are more familiar with silver grades, that's a very high-grade gold deposit, and very good, very satisfactory, certainly for underground mining. We've done some sensitivity analyses, of course, with different things, but just wanted to put up here what the gold sensitivity is, the gold price. So we anticipate revenues from this project anywhere from around $50 million to $62 million a year. Of course, our percentage of that is half, and so we see our revenues or cash flow, not revenues, but cash flow coming from this project at around $11 to $17 million annually. What do we plan to do with that money? As I said in our business model, we certainly plan on investing in exploration, and right now this is sort of our plan, if you will, is to put that money back into exploration, about half of that money, and then I think what's fairly unique about our business model is this line right down here, where we're planning to spend about 30% of that cash flow back onto dividends and share buyback programs. Again, we think that in today's market, that's going to be an important thing for investors to see dividends coming back to them, and so that's going to be a part of our plan going forward. Just generally looking at the rest of our company fairly quickly here, we are looking for other opportunities, and we have identified some that could be very similar to Butte Highlands. We are looking at those, and we know that we have the geologic expertise to look at the geologic viability of these, and then with our affiliation with Small Mine Development, certainly they have the capabilities of looking at the mining viability of those deposits, and that's where we feel like we have a strategic advantage in this area. We also own 2 contract drilling companies. Timberline Drilling is a company in the United States, primarily working in Nevada. Have about 15 drill rigs there. We are the primary underground, or I think we're the only underground drilling company for Newmont in Nevada. And we also have a company in Mexico called Worldwide Exploration that also does underground core drilling. They're drilling primarily for Pinoles at this point. These companies really provide a strategic importance to us in that not only can they provide cash flow to the parent company, but they're also there to do drilling for us in our projects when we need them. They're currently drilling right now at our Butte Highlands project, and when we do the underground drilling, certainly anticipate that they will be doing that drilling as well. We all know that the market is down right now, particularly in exploration, but we expect that these drilling companies will do even better when more drilling is being financed. Just a little bit about our company quickly. We do trade on the American Stock Exchange, now called the NYSE Amex. We have about 36 million shares out, about a $24 million market cap right now. We see that as being very, very undervalued, primarily based on the preliminary economics that you saw based on our Butte Highlands project. We certainly see that we're undervalued, as Phil talked about Hecla. I mean, I think a lot of us are undervalued in the marketplace right now. We have a good team. I won't go through everyone. You might recognize some of these people. We have a lot of good experience, and to be able to take projects and actually execute this business plan. What I'd like you to take away from this presentation is that Timberline Resources is a unique company. We have a unique business model. we have a mine, a gold mine that has about 500,000 ounces that is slated for production, and we have a carried interest, so we don't have to spend any of our money to do that. We also have an exploration division that has a history of discovery, and we are going to find some more that are going to be very similar to Butte Highlands. And then we also have the drilling subsidiaries that add cash flow and are of strategic importance to us. So with that, thank you very much.